All right, we are live with John Liley over at Veritas Funding. How you doing, John?
Not too bad this morning. Thank you. Yourself?
Doing all right, man. I'm really glad that you're on with us today. And you and I have worked together on a couple deals, helping some clients build healthy credit. And our conversations in the past have always been interesting. I remember coming to a sales meeting, and you were definitely one of the most vocal people there, asking great questions and kind of putting me on the spot a little bit, which every once in a while I enjoy. But you've been in the industry for a while. You know a lot about the client experience and about credit. And so why don't you take a minute and just kind of introduce yourself?
Sure. Thanks, man. I've been in the business about 26 years now. I think at the end of this year, it'll be 26 years. All of that's been in Utah, although I have worked at different institutions where we've lent all over the United States and the surrounding states. I like to say that I'm pre-FICO because I have been around before FICO scores. I remember when they came out and they said, "Oh, this won't have any impact on anything." And the advent of desktop underwriting and things of that nature and credit scoring models and actuaries, well, we all know what happened there. So I remember the days when you used to write a really long letter about how they're really nice people and they're nice to puppies and they shovel the neighbor's walk and all that stuff, and they'll never, ever, ever be late again, and we promise. So it's not that was easy either, because you had to make a argument with people. So yeah, I've been around a long time in the state, etc. But the nicest part of everything is, although it's kind of the same, it's different with each transaction, and with each transaction being different, you can take the experience from the one before and work on. So that's kind of what I do, and it's people experience, or else I wouldn't be around this long.
You know, and that's the perfect segue. That's why I wanted to have you on this video, is because you understand the process, but I feel like every file that we've worked on together, we've even talked about together, is about the client experience. It's about making sure the client is successful. And so you've done an excellent job of setting clients and buyers up for success. With all of your experience and being pre-FICO, I think that you know, you've got the bald man license plate. I think the license plate needs to be pre-FICO is what
I think it's back there. Yeah.
Yeah. I think you need to change that. But with all of your experience, you know, what are some common pitfalls that you see new home buyers fall into?
The interesting thing is we don't teach credit to kids, and we didn't teach credit to people my own age. And we still don't teach credit. So unless they've got an app, they hear about it online, they only know a small piece. And because they only know a small piece, they think if they work with that, somehow it's going to make things happen. A lot of times they'll go and download an app from their credit card company, or they'll work with the ones that are fairly popular on the internet. I don't need to name the names. Those scoring models are different than the FICO scoring model that's used with homes. Everyone's an expert on the internet, so they read a few things and they start working with it. Biggest pitfall I see is, I pay my bills on time. Everything should be great, but it's how the debt's distributed, whether it's going to be revolving installment debt. Student loans have a huge factor nowadays, whether or not they're paid on time. Well, I don't have to worry about that. They're all deferred. Well, you know, sometimes things do come home to roost, folks. Things to think about. So in those pitfalls, a little bit of knowledge, or the other hand would be no knowledge whatsoever. I don't look at my credit. I know it's not good, so I just don't look at it. Well, if you leave that sandwich in a drawer, it's going to come to life as a moldy thing. And at the most inopportune time, when, you know, all of a sudden you might find yourself in a relationship, married, children, etc., you need to buy a house, your lease is up, your landlord's kicking you out, and that thing has grown in a drawer for 6 months. And unfortunately, it's not coming out smelling like roses, and that's so that's when we come into play. I mean, the loan officer, I think. And the education factor comes in, and I think the biggest thing is time. And if they come at the 11th hour, we probably should have come before, when we could have fixed it 90 days, 60 days, 12 months before. That's what I see.
That's a great answer, man, because I think I think a lot of the people that you're talking about are the clients that we deal with as well.
Hmm.
And you talk about those 11th hour clients. I've brought it up a handful of times on these videos. We get these Hail Mary phone calls,
Yeah, Hail Mary, that's a good way to put it. Yeah.
and next thing you
Help me.
know,
Yeah.
what's that?
Help me. I need to buy a house. Well, yeah.
Yeah, it's tough, and it's hard to try to help people understand that, you can totally ignore your credit, but it doesn't mean that it's just frozen or stopped. I mean, it's growing, changing,
Well,
evolving.
it's a living, breathing algorithm, right? That's what I
Yeah,
try to explain to people. I go, math is the wheel of the universe. And, I might call myself the mortgage alchemist. So I have to use a little bit of magic in here and trying to make something into gold for you. But it is a living, breathing thing. It's not a static thing. It's only static if you never use it.
exactly.
And a lot of people, well, I don't have any credit, so my credit's great. Well, not really.
Yeah, it's a pay to play system, right?
Yeah, exactly.
You have to be in the game. You have to pay in order to actually get a credit score. And that's something that we see all the time with a lot of just general home buyers. They come in, they expect that just because they haven't looked at their credit score, that somehow miraculously it's just going to be okay, right?
Yeah. Well, then there's the life events, school, divorce, marriage. Um, I find a lot happens when people finally decide to settle down. So all the misspent time of youth in their 20s when they bought their first car and neglected to pay on it come back to roost because, like, well, I paid that car off like 2 or 3 years ago. Well, yeah, but you never paid it on time. And we don't mean to be insensitive to that, but that is baked into the recipe of what that score is. I think it was what that when you came in and talked to my office. I always like to use the analogy of a pizza pie, right? So I explain to people this is how many slices work for this. This is how many slices work for revolving installment, and whether you've paid on time. Because yeah, I guess credit's kind of like a fine wine or a bad wine. It just depends on how old it is, right?
It's a good point. I mean, 35% of your credit score is just made up of credit history. And
Yeah, yeah,
what people oftentimes misunderstand is they say, "Oh, well, I'll just wait it out," right?
yeah.
I'll just wait. And we live in a day and age. You brought up life events. I mean, you touch kind of a vein for us because the majority of the clients that we see are life event like clients. Something has happened, a divorce, job loss. But what we see all the time are medical emergencies, and we get clients who come to us who have gone through, whether it's minor or major, some type of medical emergency. And the CFPB released a report last year, 51% of all collections in the United States are medical. Like,
Yeah.
that's just mind blowing, right? And so you've got people who don't understand credit, who may have made a couple bad decisions, who then get hit with a life event, but they have income and a good job and they want to buy a home. They're just kind of pigeonholed into this corner where they can't do anything.
Well, and I think, that's kind of the disservice, even though the FICO model and that stuff works for how the investor wants to aggregate and sell their money and make loans available. But the challenge is sometimes copay. And that silly copay for $35 has been sitting on your credit report for 5 years, and now they want 200 and something dollars. So what's the first thing they do? They go out and pay it. And then what happens? They go and that gets recalculated in debt. Those are the things that I rely on folks like yourself. I know how to make the math work. I know how to follow the loan program, but it's those little nuances within the services that you provide will tell someone, maybe you should pay this off. Maybe you should pay it down. Maybe we need to open a new account. Those are the little nuances that people need to know. But I will tell you, those things that creep up and just hit you from nowhere and people don't realize it, that's what makes people sad. Well, I should have an 800 score. I've owned 3 houses and I pay all my cars on time. And it's one little silly thing that comes back and whacks you. I will tell you about that weight thing. I was teaching a home buyers class one time. I had started his own business on credit cards to the tune of nearly $80,000. And he told me, and he actually, he put his hand up in the class and said, 5 years for stuff to fall off my credit, right? And I said, well, I'm not quite sure. He says, I started this business and it tanked, and I've got all these credit card debts. So if I just let it go for 5 years, it'll fall off my report. And I says, are you not making those payments? No, I'm just going to let them all go and they'll fall off. And then, by law, everything's great. Again, another internet crusader telling us how it works.
Those are my favorite. Those are the voodoo specialists.
Voodoo
is kind of what we call them. If you go on Instagram, look up the hashtag credit repair, and it is my favorite. It is amazing because you get people who will post things on there, $350 and you'll get a 10-year-old trademark. What? Like that's fraud, I mean, the FCC has come out and just very plainly said that is fraud,
Well, people will come with things that they see in those videos, which is misleading. I mean, we're here in a professional environment. We're both talking from our offices. You watch those YouTube videos of these credit repair guys that's shooting it on his cell phone in his bathroom. And, you the shower curtain in the background, and he's telling you how to open an account, set up with an authorized user, and everything's going to be fine. And even those things have had changes based on the guidelines that are around. Mm-hmm. Really, totally someone trying to make money off you, not trying to help you make your money work for you. That's what it is.
Yeah, it's exactly what it is. And we've had kind of this unique opportunity to really hone in on what our messages need to be, which is there's this whole life to credit repair that is beyond disputing. Mm-hmm. And I think that for a lot of your clients, who maybe are dealing with credit challenges, as a mortgage professional, somebody that has a lot of experience, they're capable of resolving certain things on their own, right? And you can it's not your job to do credit repair, but you can say, hey, go figure it out. And there's resources and things like that out there. Most people can do things on their own. However, when you kind of get into this position where clients have, charge-offs or collections, and they're just not quite sure. You had mentioned paying a collection like a copay, and then the potential negative aspect of that, right?
Yeah.
There are opportunities there to help people build a healthy credit profile and do it in a responsible manner. And there's this whole life beyond disputing. And so it's kind of intriguing to see the battle that takes place with a lot of clients, because I feel like a lot of clients know.
Fight you based on what they see on the internet. Like somehow it's real. You're the actual professional licensed person, or the person that's actually taken classes or invested time, or the Better Business Bureau. But because a video on YouTube tells them they can do it, that's where you have to fight. And you mentioned I can do little things. Okay, so I can look at it and say, your credit card is it's almost 95% of your limit. And I know you pay it on time. I guarantee you, if you pay this down to like 35%, we're going to have some movement. The account's a couple of years old, etc. When I come to that mystery thing, what to do with that charge, what to do with that, that's when we reflect upon it and say, I think you need to talk to somebody. That's when the challenge comes. Don't go to the YouTube guru. Mm-hmm. What you need. I've seen too many credit repair companies in my time. You live in Utah, so I see these MLM credit repair companies, and don't worry, we have an app, and they try to take the human piece out, because all they're doing is collecting money on a monthly basis and someone shooting you an app. It's not someone following up with a phone call. It's not someone sending an email every 2 weeks or confirming that you did this. And you need that in a professional company. You don't need, some silly guy on the internet.
Yeah.
This is talking on the internet. I guess that's,
Let's say that one more time.
I said, aren't we talking on the internet?
We are. I feel like this is probably one of the best credit repair rants that I've been on for a while with somebody.
Good. Somebody. Yeah.
I try to stay away. I'm a big advocate of our industry, but man, sometimes we see things that are just mind bending, or hear things. But to get this train back on track and to focus on you and setting clients up for success, one thing that I've always appreciated about our relationship and the clients that you send to us and the way that you work with them is that there's no fluff. You shoot it straight. It is very clear, easy to understand, and very direct. And so when you're dealing with clients who are struggling with credit challenges, a lot of loan officers and real estate agents watch these videos. What advice would you give to them about dealing with clients with credit challenges? Because, some of them they don't want anything to do with it, right? And then the other ones, it's kind of like they're too far in. They strangle the life out of that deal.
So everyone, wants to do business, right? So what they try to do, I think, you beat it to death, whether it's that horse that you're beating to death in the transaction, you're too far into the woods, all the typical things people like to say. You never want to give up on somebody. But at the same time, you only have certain skills. So why get in the middle of trying to do something you quite don't know how to do? I do math and I do loans. That's why the agent sends them to me. I don't write real estate contracts. That's what a real estate agent does. And then I don't do credit repair. That's what folks like yourself do. When you start doing somebody else's job, I like to, people like to say, well, we need to get out of the box. Well, sometimes you need to stay in the box. Mm-hmm. A friend that was an attorney that became a judge, and he said the challenge is too many people try to drive in one lane or the other. And honestly, in order for everything to work, we kind of got to be down the middle. So what he talks about is you can go over here, you can go over there, but stay in your lane. And if you can stay in your lane and work with your specialty with the professionals to make it happen, that's going to make it happen. Because I can beat a deal to death, a realtor can beat a deal to death, and guess what happens? You lost time. Mm-hmm. And time is what you need back in some of these transactions. So, anyway, I don't know if that answered your question.
No, I think that was a perfect answer to that question, because I don't get the luxury of telling people to stay in their lane that often. So now I can just send them this video. That's kind of my plan.
I just tell them how it is, man. Back east, I don't have time to waste. I got things I want to do. You know what I mean? Let's get this done. You want to buy a house? Then why do you want to wait? Let's work, right?
I'm a big fan of that. Big fan of that. So if we were to narrow down, the advice that you've given on this, and if we were to just take the average home buyer, what is one thing that you'd recommend to that home buyer to try to make sure that they had a good experience in the home buying process?
Be present. Too many times people will rely on the technology, short quips on a text message, an email. Pick up the phone, because a lot of times we don't meet with people anymore, just across the desk because of time, because of distance, and people like the availability to work, online, etc. But be present. Just because we're not talking face to face, be present in the transaction and stay on it. I can't tell you how many new people will come into the transaction. They'll make application and you don't hear from them for 3 weeks, and you're sending them messages and they don't reply. You need to stay connected, and stay connected with your agent, stay connected with your mortgage loan officer, stay connected with your credit guy. Because if you aren't present, that's when a ball can get dropped. And just like we said, something sneaks up on you. You have to stay in the transaction and be cognizant of what's going on. And remember, you're a part of it. You're a team in that situation. It might be a 30 to 45 day team, to buy that house, but you're part of that team for that time frame. Yes, we provide a service. Yes, we're going to do things for you, but it's a contact sport. And the fact that you need to keep contact with me, work on this together. Okay.
That's solid advice. I feel like there are a lot of people who definitely go rogue because that emotional roller coaster, right? I mean, they get to the very top and then they submit the application or whatever that looks like. That's why when we talk to loan officers and real estate agents, we want to connect with your clients really around the time that they've applied, because 2 or 3 weeks afterwards, their head's back in the sand.
Yep.
And they're just not, they've kind of lost motivation. So, I think that is awesome advice. John, I love working with you. This has been an awesome video, for sure. One of my favorites. Before, we finish up, I got to give you a plug again. And I've done it a couple times throughout this video. You're super straightforward. You have a great customer experience that you create for your clients. And so if you're watching this video, if you're a loan officer, a real estate agent, I hope that this was a value add for you. If you're a client, John's over at Veritas Funding. His information will be in this video as well when it's published. But John, any parting words before we finish up here?
Enjoy your summer.
I like it. Hey, I appreciate you, man.
Hey, no problem. Thank you so much. Appreciate you having me on.